from the Asia School of Business, and we're also going to speak with Professor Jake Cohen from MIT Sloan School of Management. Those of you who don't know this, MIT is, of course, a top-tier B school, it's ranked amongst the top in the world multiple times. And ASB is a B school incubated by MIT in Kuala Lumpur. And ASB does follow a lot of the curriculum and pedagogy from MIT Sloan as well. So this is brief introduction. I'm going to get into more detailed introductions. I was actually waiting for the audience to come in. Zoom takes some time to connect. We have close to 100 people in this room right now. So I'm going to kickstart this session by actually running the first poll for the evening. So I'm just going to do that very shortly. If you're able to see the poll on the screen right now, the question is, are you worried that the world is headed towards another global financial crisis? The options are yes, no, maybe. So if you think that we are headed towards a repeat of 2008, 2009, then possibly the response is yes. If you think no, we are all set, all economies are doing well, and we are all comfortable, then the response is no. And if you're unsure, you'd want to know more, you can't decide yes or no, then the third option is for you. I'm going to keep this poll live for another few seconds. I'm expecting a lot of you to respond to this poll, so please do. Those of you who are dialing in from your cell phones, you would be able to click on the three buttons at the bottom right of your screen and then open the poll option over there. So please do that. Please do respond to your poll. It's also a gauge of your sentiment. So it's like a sentiment analysis. So let us know if you're worried that the world is headed towards another global financial crisis. Great. I have close to 100 responses come in. So this is good. I'm going to wait for another few seconds to touch the 100 mark. So if you haven't responded, please do. And in the meanwhile, those of you who have just joined, please let us know the city that you're dialing in from in the chat window. So I see Gauri from Tokyo. I saw Rodel dialing in from Abu Dhabi. So welcome to all of you. I see some people from Vellore, Pune, Bangalore, all over the country. So great to have this diversity from across the country and outside as well. So thank you for doing that. And with that, I'm going to end the poll and show the results as well. So if you're able to see the poll results on the screen right now, around 64% of you have said yes, you believe that the world is headed towards another global financial crisis, possibly a repeat of 2009 or 1999 and something like that. 17% are confident in the current state of the economy across the world, so no, and 19% are not able to take a stance, are undecided. So great. So thank you for sharing those responses. This is extremely insightful. The reason I ran this poll is because our today's session is extremely insightful. It's extremely relevant. We are mainly going to talk about investments and capital market 101, but we'll also discuss and comprehensively understand financial crisis from an academic and a practitioner's perspective. And this is focusing on past and recent crises in Asia. We'll learn about the causes, the evolution of financial crisis, and the key reasons learned from all of them. We will also talk about financial product design, which financial products and structures such as equities, bonds, hedge funds, derivatives, private equity, real estate, and annuities meet the particular function defined by the needs of the market players. And the market has a lot of players, right? We know there are buy-side, sell-side players, and there are brokers, and there's so many players involved in the market, and we'll understand the whole ecosystem today. Whom are we speaking with? Who are the two experts and the two faculty or academicians on our panel today? So we have Professor Joseph Cherian. He's a practice professor of finance at the Asia School of Business. He holds a bachelor from MIT, so Massachusetts Institute of Technology, and an MSc and PhD degrees in finance from Cornell University. He was previously a practice professor of finance and founding director at Cambridge at the National University of Singapore. And before that, he was in the industry. He was the managing director and global head of the quantitative strategies group at Credit Suisse in New York. So we are going to learn, he's going to drive this masterclass for the next 30-35 minutes. And he's going to take us through this entire concept of investments and capital markets 101. Post his masterclass, we'll also speak with Professor Jake Cohen, who is a senior associate dean for undergraduate and master's programs and a senior lecturer in accounting, ethics, and law at the MIT Sloan School of Management. As I said, MIT needs no introduction. The Sloan School of Management is known to be amongst the top B schools in the world. It's topped the rankings multiple times in various rankings. He has got extensive experience in the Asian markets as well, having served as the dean of INSEAD's MBA program between 2008 till 2011. And he's taught at many other leading B schools, including Harvard Business School, INSEAD, Oxford SAID, Cambridge Judge, Tsinghua University's Business School in China, and the Schwarzman Scholars Program as well. We will talk to him about what motivated MIT Sloan School of Management to incubate the Asia School of Business and set up a B school in this part of the world, and particularly a B school which follows the pedagogy of action learning that MIT is so well known for. Post his session, post his talk, we'll also speak with Stephanie Wong, who's the Director of Admissions at ASB, and she'll be able to answer any questions that you have about the ASB MBA program. So it's a very exciting next 60 minutes for us. So stay tuned with us, don't drop off, stay with us till the very end, and you may learn something extremely insightful and something extremely relevant in today's session. With that, I'm going to hand over the screen to Professor Joseph Cherian to take us through his masterclass on investments and capital markets 101. Over to you, Joe.
Thank you very much, Sanjay, for the very warm introduction. I'm going to share my screen, and hopefully all of you can hear me. And I don't want to bore you with too much capital market stuff, but I just thought I'll give you a flavor of what we do at ASB. And this is a particular elective I teach, but I'm of course not going to go through all the technical details, but give you an overview of what we do. Firstly, I must emphasize that I was trained at MIT. I have a long association at MIT. Even my dissertation advisor at Cornell was trained at MIT. So we are basically what we call MIT finance trained people, engineering and finance. So a lot of what I'm going to say is what I learned in my formative years, studying at MIT, and then following through when I was a professor at Boston. I basically spent a lot of time with faculty at MIT. And that influenced a lot of my thinking. And I'm going to just share some of that thinking with you. Of course, I worked in the industry, so I basically also practiced what I preach. One of the things that happens in the financial industry, and you may face it in your own retirement savings or your wealth management and all the other stuff when you deal with bankers or product specialists, is they try to push a product towards you, as opposed to seeing what's your need, what's your goal. So I'm going to talk a little bit about the functional approach to finance as opposed to the product approach. Then the second is how that functions lead to the appropriate products and not the other way around. And we may do a retirement finance case study, since many of us worry about retirement for our parents, our grandparents, and so on. Then I'll delve a little bit into what causes financial crisis. I see 67% or 64% of you think we are going to go into another GFC. So basically, we'll talk a little bit about that. I'll make it fast and quick because, and a very high level, because I want to make sure you can ask your questions of us about ASB, about the ASB MIT collaboration, and so on. So a fundamental tenet in finance is sound financial functions matter and not the institutions or the products. So it's an approach that says, functions, what does finance and capital markets and products exist for, as opposed to here's a product, see how it fits into your lifestyle or your life cycle investing program. Secondly, they should be constant across geographies, cultures, income levels. Of course, you got to adjust for jurisdictional differences, regulatory differences, cultural differences, but generally speaking, these functions should be roughly constant across these different facets. Institutions are a natural outgrowth of these well-defined functional forms. Okay, I'm going to get to where we want to be. So let me build up the story here. So we must first need to define the functions in finance. And this was taught to me by the one and only Nobel laureate and professor of finance at MIT Sloan, Robert Merton, a colleague of Jay Cohen, who's sitting here with us today. So as I said, he defined this in a 1993 paper, and I was so privileged to actually have lunch with him, a 3-hour lunch with him, where he talked about all these ideas, and it stuck with me up to this day. And even when I was in the industry, I thought of it always as, what function can I fill for a client, whether it's an institutional client, a retail client, or a high net worth client, and then decide what are the appropriate products. So that's where we're going today. They're also a result of keen competition, innovation, and free markets. We always believe the best financial institutions, products, and people, human capital, and structures exist because competition will drive away the not so well-intentioned ones, okay? So the 6 core functions performed by the financial system are: 1, to provide a very cost-efficient way to transfer economic resources through time, across income levels, across industries, across borders, right? We all know that. Second, to provide ways of managing risk. We all hear about financial risk management, how we should manage our portfolios so that we don't face huge drawdown risk. Third, to provide ways of clearing and settling payments. We all transfer money abroad. You may have to pay for tuition if you go to America or to Singapore, to Malaysia, hopefully. You need to settle payments and facilitate trade. And that's one function of the financial system. We need to pool resources when you want to subdivide ownership, when you want to pool risk. That's one way in which financial markets can help you do that, so that risk can be mitigated as you share it across individuals, institutions, and so on, through the function of the capital market. Fifth, it has an informational role. When we look at prices, order flow, and volume in the stock market, for example, it gives us information. When you look at volatility, many of you know that market pundits follow something called the VIX, which is the implied volatility of the S&P 500. Very well-known indicator of risk aversion in the market. So it has an information role as well. And the VIX is one example, which is the volatility index obtained from the implied volatility of S&P 500. Finally, it provides ways of dealing with the incentive problem, both adverse selection, when there's asymmetric information, or you have more information than me. Markets help diffuse that tension, or when one party acts as an agent for another and doesn't act in the best interest of the principal. That's called the moral hazard. For example, you ask an agent to manage your money, but he or she takes on too much risk because they have a bonus system that is a function of the reward they return. So if they make a big reward, they get a big bonus. If they don't make a reward, no penalties. That's sign of a moral hazard problem. As I mentioned in the footnote, this was all taught to me by Professor Merton in his book, which was written with his co-author, Professor Zvi Bodhi at Boston University. And they wrote about this back in 1992, and it was republished in 2020. I strongly recommend you take a look at this, because there's no math, there's no technicalities. It's just talking about finance. What is the role of finance and capital markets? I will make these slides available through Sanjay. You're welcome to actually look at it. Don't have to take photos or screenshots. Don't waste your time. We'll make it available for you. Okay. The core finance investment principles are the next thing we have to define. One is diversification. Don't put all your eggs in one basket. You maximize returns for the same risk or minimize risk for the same returns. You'll learn that in Portfolio Theory 101 when you come to ASB, or if you go to MIT Sloan. It's common across borders, this concept. Second is hedging. You protect for losses by sacrificing some potential gains. In other words, ensuring a sure return by protecting your loss, but you got to sacrifice some gains. And those are contracts like futures contracts, swaps contracts, and so on, allow you to hedge. Third is insurance. No different from your car insurance or home insurance. Basically, what happens is you pay a premium to participate in the upside, but you don't want to give up the downside. You don't want to face the downside, sorry. So you got to pay a premium, just like car insurance. You got to pay a premium. If your car gets into a wreck, you get a payoff, okay, no loss. If your car doesn't get into a wreck, you have the residual value of the car if you want to sell it, right? So that's insurance. Financial products that provide insurance to investors are what's called put and call options. Again, the theory of option pricing was also developed at MIT Sloan. So MIT is very famous for a lot of the concepts that you're seeing here today. So graphically, so I know there's some engineers in the room. So let me show you graphically. Diversification is that efficient capital markets line that you see there. If you don't know what that looks like, don't worry. When you come to ASB, we'll teach you in detail. Okay. So that's basically this function of maximizing a return for a fixed risk or reducing your risk for a fixed return. Okay. That's what the graph is showing. Second is hedging. You have a distribution of returns. I'm willing to give up some gains on the right-hand side. So I'm showing you my mouse. I'll give up these gains to pay for the protection against losses. And there are contracts of products that allow you to do that. And finally, insurance, where I want protection against losses, no losses here, but I want to participate in the gains. If my house goes up in value, I want to participate in the gains. But if I face a fire, I want protection against a loss of fire through fire insurance. Financial products also provide this. A lot of people talk about diversification, especially when you go buy a mutual fund product in India or in other parts of the world. Everyone talks about diversification. Don't put your eggs in one basket. But these two strategies are also important. And we'll show you when you come out to our MBA program how these things are implemented, okay? Let me ask you now to do this. I don't know if y'all can go to Menti. There is menti.com, or use the code and then use the code 6876. I just want to see if you can tell me what eliminating exposure to bad outcomes. I want to see if you're paying attention. All 170 or however number of you. Can you answer this? Please put in the chat if you can't get Menti to work, because sometimes this thing is a bit kludgy. Sanjay, please monitor the chat and see if they can use it.
No, absolutely, yeah, I am. I've also posted the link to menti.com in the chat window, so you can just click on that link, use the code 68769157, and you'll be able to see the poll question that.
Okay, and I'm going to see. I wonder why. Oh, here we go. Yeah, well, only one answer. Why is that? We need to get more people
coming in. I think people.
Oh, there we go. There we go. People, they're not. I should not show the results. I should hide the results. Sorry. Oops, I'm already showing the results. Okay, never mind. That's a good try. This is just a warm up. I'm sorry. Yeah, well, please don't choose the wrong result. Now that you got it, that's what ASB teaches you. Once you see the answer, pick the answer, okay? And the answer is insurance. Let's try another one. Thanks very much, guys. Let's try another one. Eliminating exposure to bad outcomes. That's a tail risk. That's the left-hand side of distribution by giving up possibility of some gains. What's that referred to? Let me start Menti. I have to start Menti. And let's see, can we get the answers?
So I posted the link to menti.com in the chat window. I was also posted the code in the chat window, so you can just copy that code and open the Menti poll.
And then I'll turn it on in a few minutes so we can see the results. I don't want to turn on the answers. I want to turn on the results. Let's see. We have about 19 so far, 25, we're getting there. Well, in the interest of time, let me just show the results. Hedging, very good. Wow, this is a fantastic class. Make sure you apply, okay? This is a quiz. Very good. Hedging, that's good, guys. And that's the answer, hedging. Okay, let's do the last one. Optimally balancing risk and return trade-offs to move the efficient frontier in the northwest direction. And hint, hint, this is, don't put all your eggs in one basket. Let me start Menti once again. Sorry, I should start it. And then this time you should be fast. You should get the hang of things. This is how I conduct quizzes in my class. If you get it all right, you get an A+. Well, not really. We have a distribution, sorry. But you can buy insurance for my class. You can protect yourself from downside risk. Okay, let's see what the results are like. Oh, wonderful. This is a very smart class, Sanjay. Thanks for assembling them. Okay, very good. Good, guys. Thank you very much. We can close this out now. So let's go back to function versus product approach. Let me give you some scenarios, and you have to think in your head mentally, no more Menti. You have to think mentally, what is the answer, okay? The average is investor and concerned about 3 fundamental issues during retirement. Receiving a reasonable level payout every month. So let's say we did a survey, and this is what the survey of your uncles, aunts, grandparents said about retirement. I care about receiving a reasonable level payout every month. It should last for as long as I live. It's a lifelong payout, and it should be indexed to my cost of living. Okay, so now, typically an investor will throw a whole bunch of products. They'll start at the right-hand side instead of left-hand side. Now, put it in the chat box. Which one would you choose when your uncle or aunt who's about to retire told you, this is what I'm concerned about, and you are a financial advisor? Looking at the left-hand side, which is basically the functional approach, looking at the goals of your uncle or aunt or your grandparents, you need to pick a product. Which would you pick? You can put it in the chat box. We won't have Menti this time. Okay, and I'll give you the answer in a minute. If Sanjay can read out anything in the chat box, because I don't have it open. Are there any answers? Anyone choosing?
So Naga is saying product approach. Okay, this is going too fast. A lot of responses. I see a lot of life cycle responses. I see target income, the golden rule, receive. Okay, it's going too
Okay.
fast. Too
Well,
many
we've got a
responses.
very diverse audience. Whoever picked target income or life annuity has chosen the right answer. So
Okay.
pat yourself in the back, whoever it is. And Sanjay, please give them a small little reward from Seed for
Sure.
getting
So
the
I
right
see
answer.
Amit Sahu said target income, so he was the one, and then there was, I think, one more person,
Very
Charu, who
good.
target income as well.
Okay. Stephanie of admissions, our director of admissions, is taking notes of all this. Very good. Okay, next question. Goal is to provide 4 years of tuition fees and lodging at a university, beginning when your child is 18 years old. Let's assume you have a child, you're about 40, and you're trying to save for retirement for a kid who is about 6 months years old, 6 months, and you want to save up to send your kid to ASB or MIT when he's 18 years, when she or he is 18 years old, which means 18 years from now. What would you do? Invest in growth equities when your child is young, then moving your investment slowly into bonds as she approaches age 18, or buy a laddered inflation index bond portfolio maturing at age 18, 19, 20, 21. Which would you choose?
Okay. So I'm still receiving responses for the first one. So to the audience, yes. So for the second question, you can either say one or two. So one is invest in growth equities when your child is young, then moving your investments slowly into bonds as she approaches age 18. Or choose two if you want to choose the option of buying a laddered inflation indexed bond portfolio maturing at age 18, 19, 20, 21. So I see responses coming in and there is split house, a lot of ones, a lot of twos as well. Charu, Surya, Rodel, uh, Ruchi, they have said one, Gomesh, Zikra, Simran,
Okay,
Shah.
very good. Okay, so I think
A lot
this
of
is split. You can do it two ways. See, the first one is what's called a target date or life cycle fund. That means you target the date, which is 18 years from now, and you do what's called a glide path strategy. You start with growth equities and then you move into bonds. A lot of investors do that. But I'm very risk averse and I'm a safe type of investor. So what I would do is buy a laddered inflation index portfolio of tips that mature at age 18, 19, 20. So I have 21. So I have no uncertainty about the payout. I'll assume tuition is growing at the rate of inflation in this example. So that's what I would do. But some people would choose option one. So both are right. So all of you get into school if you chose one or two. Okay. Stephanie, I hope I'm not offering too many admissions here. You can overrule me, okay, Stephanie? Thinking about diversification, hedging, and insurance and the associate costs when planning your lifetime wealth and financial management strategy, okay? So when you think about diversification, hedging, insurance, and the associate costs when planning for your lifetime wealth and financial management strategy, what would be the right answer? Start a fintech company in Bangalore or Singapore to provide a one-size-fits-all robo-advisory solution to investors with machine learning, chat GPT, and web crawling technology built in. Agree or disagree? Just say one or two. Agree means one, disagree means two.
So I think this is okay. Lots of twos actually. So few ones, a lot of twos.
Very good. Thank you. So again, there's no clear answer, but I can show you in my class because I teach an elective on advanced portfolio management right now. I'm teaching tomorrow night to MBAs and executive MBAs, and I can prove to you that ChatGPT's answer is first order right. It is not second order right. It needs a bit of more thinking, second level thinking, and a good MBA training of the likes of MIT Sloan or ASB to get the answer perfectly right. ChatGPT doesn't get it right. And I'll give you the live examples in class if you come to KL, okay? No pressure. Okay, anyway. So in order to ensure adequacy, I know India, Malaysia, many countries are facing retirement inadequacy problems. What you got to do is make sure you buy safe securities first, save up enough to buy inflation index life annuities in retirement so you can fund your consumption and healthcare needs. I prefer life annuities that are guaranteed by the government. In Singapore, it's one of the few governments that offer this life annuity as a guaranteed product so that every Singaporean will have a basic wage for life until they die. The Singapore government guarantees it through the CPF Life. CPF is like your EPF in India and the EPF in Malaysia. It's a provident fund. Work longer. Unfortunately, you may have to work longer. Unlike the French, most of us don't mind working longer. So I think that's okay. And finally, unlock real asset values, home monetization schemes. That means you can actually do a reverse mortgage scheme. Malaysia just started one by a government agency, and Singapore has one also offered through the CPF, which is their provident fund. So what you do is you take a reverse mortgage. That means you convert your equity you built up in your home at the age of 65, and now the government gives you a mortgage payment, okay, for life. That will supplement your retirement income. In Singapore, if you put aside $270,000 in a reverse mortgage program, you'll get about $2,700 to $3,000 a month, Singapore dollars a month for life, guaranteed by the government. Unfortunately, it's not inflation indexed, and we're working on the government to get it changed to inflation indexing. America has a lot of private sector products that do reverse mortgages. So these things exist. Again, find ways and solutions to help solve problems, real world problems. Many people don't realize their homes can be monetized and can supplement their retirement because they are asset rich and cash poor. So how about changing some of their assets to cash, right? That's what home monetization does. You learn about all this. Many people, retirees, don't understand reverse mortgages can help you monetize your home and help in your retirement, especially for your grandparents and all that, to supplement their income. And basically, that's one thing that I don't know if India has it, but Malaysia and Singapore have this now. Hong Kong has it as well. And many of the developed countries have such a program. Okay, then of course you can do other things like rent out a room and so on. So what's the perfect retirement product? So to me, the perfect retirement product is one that is a life annuity, like I described to you, offered in Singapore, the CPF Life. And then you have upside participation, okay? You participate in some kind of investment-linked product. To me, this is the perfect product. It gives you my basic wage to meet my consumption and healthcare needs. And this floor increases at the rate of inflation. Whatever your home inflation rate is, it'll increase. So every year, you are constant in the purchasing power part of your consumption and healthcare needs. And then if the markets do well, the safety net is okay. You can participate in the market. Okay, that's one, to me, a perfect retirement product. Okay, and ensure it's inflation indexed. So if your government is going to offer something like this, please ask them to make sure it's inflation indexed, because inflation is important all the time, not just when it's high. You don't buy car insurance only because you had a car accident. You buy car insurance to help you protect yourself from an accident. So you buy inflation irrespective of what cycle you're living in. Okay, the last thing I'm going to talk about, let's see how much time I have, maybe a few more minutes, is about panics and crashes. So again, this was done by the MIT Press, that there are 6 steps that Charles Kinderberger talked about in every financial crisis. And every past crisis followed those 6 steps. Again, you'll have the slides and you can look at them. There's the Asian currency crisis, the dot-com bubble, the global financial crisis, a more recent one, European sovereign debt crisis, and of course, the 64% of you who worry about the next GFC, okay? Every time it happens, unless it happens to an emerging country like India, Korea, Malaysia or something, they will say, this time it's different. Otherwise, they'll say, tighten your belts. If it happens to India, China, Malaysia, Korea, they'll say, tighten your belts. But if it happens in America, no offense, I lived there for 35 years. Let's bail it up because this time it's different. Charles Kinderberger, in his book, he's American, and he wrote it at MIT, said there's 6 steps. Every time it's the same thing. It's no different. There's no this time is different. Don't bail out those who don't deserve to be bailed out. That's what he says, irrespective of nationality, culture, and so on. Okay, so what drives it? Well, there's a lot of behavioral functions like anchoring, decisions made using initial or most available information, framing, decisions condition of positive or negative frames, and of course, prospect theory, where people are afraid of losses far greater than the utility they get from gains. This was found out by two Nobel laureates, Kahneman and Tversky, and they are very famous for bringing behavioral economics and behavioral finance to the forefront of the way we do analysis in finance and markets. Herding is another big thing, the madness of crowds, and momentum, that's positive feedback trading, what we call chasing returns. We all have this weakness to chase returns, and we always enter the market when it's too late, when the market turns around, when the bubble has burst. So it has happened many times. So please be careful not to fall into any of the behavioral biases. Let me say one example. How old do you think this man is? This is called anchoring. If I ask control group 1, he's between 52 and 62, and control group 2, he is between 62 and 72, a spread of 10 years for each. Obviously, control group 1 will choose a lower median answer or mean, and control group 2 will pick a higher one. This was proven in experimental studies. Of course, I'm neither of this group. I'm much younger than this. I'm probably, hitting puberty from the other direction. Okay, framing. This is when they say a positive frame versus a negative frame. Basically, when you give a positive frame, people are willing to take the risk. When you give a negative frame, people are not willing to take risk. But in terms of probabilistic outcomes, it's identical. So how you phrase the question can also result or yield different outcomes. Prospect theory. This is what the two Nobel laureates, Kahneman and Tversky, got. You'll hear a lot about this. People get utility of joy where they show risk aversion when facing gains, but when they face losses, they begin to exhibit risk-seeking behavior. They prefer lotteries when they face losses, and they prefer a sure outcome when they face gains. In economics, it's symmetric. You always prefer a sure outcome over a lottery of outcomes. But Kahneman and Tversky, who won a Nobel Prize for this, showed through experiments and empirical studies that people actually become lottery players when they face losses, and they become risk averse when they face gains. So our economic models we've used for the last 50 years need to be thrown out of the window because people are not behaving the way our financial economic models were structured. Very important point. So you've got to include prospect theory when you study markets and market behavior. The rest of it, mental accounting, overconfidence, herding, I've talked about. I'm not going to go through the detail because it's 10:35 and I think I have to stop now. Sanjay, am I right? Is it time to stop so we can
right.
take? Yeah. Okay. So Sanjay, I'll share the slides with you through our team, and please feel free to post it on your website so they can download it. Okay. So now I'll hand it back to you, Sanjay. Thank you all for listening to me. If you really love the stuff and you want to get more 30 hours of this stuff, come to KL and register for my class. It's called Portfolio Management, and we'll have a lot of fun doing it. Over to you, Sanjay.
Great. Thanks, Joe. Thank you for that insightful session. We do have a couple of questions that have come in, but I'm going to encourage the audience to ask more questions. So audience, if you have more questions for Joe, you want to know more about finance, what he teaches in this course, anything related to careers as well in Malaysia, in Singapore, in Asia, in the finance domain, then he's the best person to go to. So ask more questions. I would encourage you to do that in the Q&A window. At this point, I'm going to invite Professor Jake Cohen from MIT Sloan School of Management. As I said, MIT is the one that's incubated the Asia School of Business in collaboration with the Central Bank of Malaysia in Kuala Lumpur. So I'm going to invite Jake to tell us more about what motivated MIT to incubate a B school in this part of the world, and how is ASB unique in its approach in terms of curriculum, pedagogy, and how does the MIT influence flow into the classroom over there. So with that, over to you, Jake.
Great. Thanks, Sanjay. Hi, everyone. It's great to be with you. Joe, that was terrific, talking about the core finance functions. And in fact, I think many people would agree that if modern finance was invented anywhere, it was invented at MIT Sloan. And it's great to see that there are lots of people from MIT who are teaching at ASB, such as yourself. And of course, sorry. So it's nice to be here and talk about some of the issues that you raised, Sanjay, and that is what excited MIT about launching a partnership with the Central Bank of Malaysia, Bank Negara Malaysia, with a new school, the Asia School of Business, which I think is a terrific place with a great offering that should be very exciting to many. So MIT is involved with a number of global partnerships. And truthfully, the ASB in Malaysia is one of our largest. And it's very important for us to have an understanding of how management education and management practice plays in the world. We want to make sure to understand what's happening in Asia and Europe and Latin America, of course, here in North America, and make our teaching relevant to our students. So we have a number of these partnerships, but as I said, the partnership with the central bank and with ASB is by far our largest, and we care deeply about this. This is something that was launched in 2015. I was happy to be involved from the beginning. I've been teaching at ASB and engaged with it really since we launched this great school. And what I would suggest is for people to really take a look at the program. The program really benefits from the best of MIT. Our pedagogy at MIT, as some of you know, is around our motto, mens et manos, mind and hand, the theory and practice, connecting academic knowledge with practice. And we do that in a number of ways. We do that in Malaysia by having our students experience working side by side with folks and companies in the ASEAN region, a region that is very fast growing, and we want to make sure to understand it and engage with it. So to a large extent, that's really how MIT looks at the world, that it is important to have both theory and practice, and one without the other is not enough. And I'm delighted to see that that pedagogy was brought into ASB. And as mentioned, ASB has many terrific faculty. You just saw one of them, Joe, who were trained at MIT, but truthfully, there are lots of other faculty members at ASB who were trained at top schools, who are now working in KL and teaching the students. In addition to that, as part of this partnership, we have MIT faculty who regularly travel to ASB, teaching in Kuala Lumpur, and enjoying that because it's a great place. And as I said, I'm one of them. I travel regularly to Kuala Lumpur and have had the pleasure of teaching a number of courses there. But there are lots of faculty who do that. In addition to faculty traveling to KL, we have students from ASB who come to MIT in the month of May and spend 3 weeks here, taking classes, learning directly some topics like entrepreneurship and finance, and building on what they learned in KL by experiencing the ecosystem of Cambridge and the innovation entrepreneurship around biotech and cybersecurity and many, many other things. So the year is really one that allows students to learn from the best faculty at ASB, the best faculty at MIT, and engage with the two ecosystems, really getting a focus of what's happening in the East, in Asia, and also the best of the West here in North America. So that's really what the program is about. We also have Masters of Central Banking, and this really is terrific because students who are earning an MBA can benefit from some of the central bankers who are on campus at ASB. And I've for a long time believed that it's very important for the private sector to understand the public sector, and vice versa, for central bankers to understand the private sector and work closely together. And the nice thing is at ASB, there are often master classes taught by central bankers from India, from Japan, from the Boston Fed, and MBA students can benefit from that. And again, that understanding of the public and private is critical. So I think that's another unique value proposition that I would encourage you to look into. The nice thing is, because of this partnership, because ASB is a strong partner of MIT, ASB students are also able to apply to study at MIT in the MSMS program. The MSMS program is a one-year program. It's like a second year of an MBA where it's all elective courses. It's a STEM program, designated STEM, so there are opportunities to work in the US after graduation. And what's nice about this program is it provides you with an opportunity to do a deep dive into a topic that you care mostly about. So if you care about environmental issues or artificial intelligence or what's happening around a certain discipline, you can do a deep dive by taking courses at MIT, both at Sloan and the other schools of MIT, but also because of our cross-registration partnership with Harvard, you can take courses at Harvard, at the business school, law school, Kennedy School, if you're interested in public policy, and other. So it's quite a rich experience, both at ASB and KL, once you do the MBA program. And then if you're so inclined, you can continue and apply to the MSMS and do a second year here in Cambridge and again, get into some of the material in a deeper way. But overall, I would highly encourage you to take a look at that. There's a great article that was published recently in Forbes magazine about the MBA program. It talked about the new leader of ASB. Sanjay Sarma has been a vice president at MIT for a decade and has recently taken on the role of president at ASB. And in that article, it goes into a little more about what makes ASB such an incredible place, which I highly recommend to all of you. So with that, why don't I stop, because I'd rather have more time for your Q&A than just talking about it from my side. So Sanjay, back to you.
Thank you, Jake. And to the audience, if you missed this part, even during the ASB MBA program, you can do up to 3 weeks of courses at MIT. Did I get it correct, Stephanie? So let me bring in Stephanie Wong, who's the Director of Admissions at ASB, to tell us a little bit more about the 1 year at ASB, and then we'll get into the questions around admission criteria, programs, and I'll also take up the questions that you've asked for Joe about his masterclass. So Stephanie, if you want to just do a brief spiel around the ASB program and how during the course of that 1 year, the students can also study at MIT for some time.
Sure. Hello, everyone. So Jake has already given us an overview of the school and also the program itself. So I'm happy to share with you this is 1 year program. I think it's very important for you to know you are not just going to sit in the classroom and learn about the concepts and theories only. At the same time, you will have a lot of action learning experiences in different forms. So it's very exciting because many programs will expect you to just go to the classroom to learn about the concepts and theories. And at the end, you will take a couple of weeks of capstone projects, and then you will finish the program. But for us, if you join us, it will be from the beginning to the end, you will have lots of actions to take, especially when we are asking you as a students to actually work with companies in Malaysia and also outside Malaysia in business practicum format and also action learning project. And after doing all these projects, as what Sanjay just mentioned, also Jake mentioned, you will have the opportunities to study at MIT, which is for 3 weeks immersion program. So you will have the actual experience there. And after you finish that, you will also come back and do this global summer associate program, which is like 8 to 12 weeks, which is a job placements like an intern, or alternatively, students, if you are interested in doing independent study instead of working as an intern, you can do so as well. So that's why we do expect the students, apart from the classroom learning, to learn about the core and elective courses. You will also do the action learning experiences. And on top of that, the career development and personal and professional developments are also a core part of our components. So they do expect that 12 months program is going to be very intensive and very fruitful as well. Now, quickly talk about the admissions requirements. Well, you will be surprised that in our program, the average years of experience for the full-time is actually 7 years, although our minimum requirements is 2 to 3. Now, overall, we do look at not only your academic qualifications, we actually focus more on your experience, professional experience, and also your leadership potential, and also the commitment as well. Basically, you just cannot just be good at one thing. you have to be all-rounded as well. So I guess, if you're excited about all these action learning experience and the whole, I would say, the holistic experience, this is something that we can offer, and also we expect our students to have as well. So I would stop here too, and so that you can ask questions for the next 10 minutes. Yeah.
Sure. So I'm going to start picking up the audience questions in just a minute from now, but I'm going to launch our second poll for the evening. This is on the screen right now. So those of you who are still in the room, if you can respond to this poll question, that would be great. My question is, which factor plays the most important role in your choice of B schools? So what is the factor that drives your decision? Is it the rankings that play the most important role? Is it faculty and curriculum? Is it funding scholarship opportunities? Is it the location? Is it the career development support that you get from the school? Or is it something else that really decides? Or is the pivot, the most important decision-making factor for you? So I'm going to keep this open just for the next 10 to 15 seconds. So please do respond to this poll if you can. In the meanwhile, I have posted the link to the article that Professor Jake was talking about in the chat window. So you can also go read up about that article from Professor Sanjay Sarma, who's the president at ASB now, about how the ASB MBA program is unique in itself and why you should consider the same as well. I'm also going to post one more link in the chat window right now. This is about profile evaluation. So if you want to get your profile evaluated by Stephanie, who's the director of admissions at ASB, and get feedback on your fit with the ASB program, how you can make the most of it, I've also posted a link to a Calendly link for the same. These profile evaluations are happening on coming Saturday, which is the 27th of May between 12 p.m. to 1:30 p.m. IST. Sorry, I haven't mentioned the time. It's 12 p.m. to 1:30 p.m. Indian Standard Time. So if you are based in India, which is where the majority of audience is, you can go pick a 30-minute slot and get your profile evaluated by Stephanie during that window. So that is in the chat window as well. The link to the profile evaluations is in the chat window as well. With that, I'm going to end the poll now and share the results. So great. So if you're able to see the results, 37%, so maximum number, are driven by funding and scholarship opportunities. I can understand that MBA can be an expensive or a really valuable investment. So, it's a perspective, but we can, of course, take Professor Joseph Cherian's inputs over there and how it's a great investment and how we can recover the most value out of it. He's the finance expert over here, so we'll talk to him shortly. The second aspect that drives the decision is the career development support. So I'm going to talk to both of them, all three of them, and talk a little bit about the career development office at ASB as well. And then, of course, faculty curriculum, rankings, location, all of these play a role as well. So with that, let me get into our Q&A and start asking those difficult questions. So the very first question that I want to pick up is the most updated question. This has been asked by Surya Vamsi Tonka. Professor Cherian, this is for you. His question is, what are the career options that people who have an immense interest in the stock market, right? So post ASB. So I'm going to frame it in such a way that post ASB, and you must have seen your students over the last 5-6 years, what kind of career pathways they get into the financial markets, either in Malaysia or in the whole Southeast Asia region.
Okay, let me answer this more generally. First of all, it's not just the stock market that's looking for good people. We have fixed income markets, we have pension funds, we have sovereign funds, asset managers like the BlackRocks and so on. They're distributed all over Asia. The question is, where are they hiring, right? So basically, I need to mention to you that first you need to be well trained. It's not just enough to be well-intentioned. You got to be trained about finance, the concepts, the basics. How do you invest? What's credit analysis? What is a swap? What's futures? What are clients looking for? So, and the client could be an asset manager. It could be a sovereign fund. It could be a pension fund. It could be a high net worth investor, or it could be just an ordinary investor. So there's so many career options. You could be a product specialist. That means somebody who's not managing money in the stock market, but serving as the go-between between the client and the fund manager or the analyst. So there's so many types of jobs. Don't be too fixated in the stock market because it's the biggest capital market in the world, But there are so many other options, because you may find out that you like fixed income securities better. That's bonds and convertible bonds and so on. So it depends on what your interest is, and that's how you decide on what career you want to follow. That's the way I would answer. I see a few other questions, Sanjay, that are related to CFA and career. I can take them all in one go, maybe quickly. And it's also related to Surya's question. So I would say the CFA certification is extremely important to be validated, certified by employers. Just saying that you started your CFA level 1 or passed your CFA level 1 gets you to the front door. I see this in New York. I'm actually also a professor at Cornell, a visiting professor at Cornell, a permanent appointment. And I also help students in New York, my Cornell students in New York, my students in Singapore, where I worked for 13 years, and the students now in Malaysia. Every time, what opens the door in the financial market space is saying that you have a CFA. Now, of course, if you're an MBA student embarking on this journey, at least completing your level 1 is a good sign, and saying I'm registering for the level 2. So all I can say is CFA is a necessary thing if you want to move into the financial market space. That means being a portfolio manager, analyst, a securities analyst, and so on. Okay. Then the other thing is about switching careers. I'm an engineer. I was trained in engineering. I worked as an engineer. Then I switched to finance. So, and now I've made my career in finance, first as an academic, then on Wall Street, and now back as an academic. So there's no problem switching. In fact, I think engineers make the best finance people because they are quantitative minded, they have scientific mind, and they get the sort of, how should I say, the market experience. Because the way MIT and ASB teaches is action learning, as Stephanie Moiter. So my class that I teach, everyone has got a Refinitiv Thomson Reuters screen, and they work with me to take ideas and practice by downloading data from the Thomson Reuters, which is like a Bloomberg screen, and they have to do simulations, do drawdown analysis, information ratio calculations, so on. So it's a very experiential learning type class. And that's the way we teach. And it's a very much an MIT model. That's how I was trained as an engineer. After my theoretical class in the world famous professor of engineering, we'd be sent to the lab, and we have to actually go and fix circuits and build chips and stuff like that. Okay. Career option, let me see what else. Fees, I'll leave that to someone else. What are the various career opportunities overseas in derivative markets? Unfortunately, the derivative markets, although it's such an important market, the central banks are the biggest users of derivatives. I think you've heard of bilateral and multilateral currency swaps. What are they? They are derivatives. Trillions of dollars are transferred every year in currency swaps. But unfortunately, the derivative market in America is narrowing. I know a lot of my friends who teach derivatives. There are fewer jobs in derivatives. But I tell you, as risk management skills increase in this very uncertain world, derivatives will come back. They are very important for risk management, hedging, and insurance. What other questions are there? Let's see. Should people interested in derivative markets do CFA? No harm, because CFA also has a big derivatives component. Now I can tell you what people are looking for is sustainable investing, ESG, data analytics. Whether you're a portfolio manager, analyst, a sell-side person, you would need these skills. You need to know about sustainable investing. You need to know about ESG. So a lot of our curriculum has got sustainability and ESG investing in it. In fact, in my PowerPoint, which I'm going to ask Sanjay to distribute, you'll see some programs that we offer. It's QR code driven. It's at the end of my slides. Feel free to look at that. I also have a book out, and you can take a look at it. There we talk a lot about these issues: portfolio management, sovereign funds, retirement. So if you're interested, very easy to read book, and you can also take a look at that. It's all in my PowerPoint. I forgot to show it, flash it out to you, but take a look at it when you get that. Sanjay, are there any questions I missed? That maybe you can hand it to others.
Sure. So majority covered, Joe. One question, and I think there are people who come from a non-finance background who are looking to make a transition into finance. And there's some people without work experience right now, so they're possibly looking at an MBA program a couple of years down the line. What can they do during this time to prepare themselves for a career in finance if they come from a non-finance background? Or do you recommend they do a CFA, or should they consider doing a master's in finance first before looking at the MBA program? Any guidance over there?
Okay, I can tell you that, you can choose the Master of Finance, you can choose an MBA, but as long as you're getting rigorous training, if you want a more generalized degree, and do some finance, you can do the electives in finance, like my course, for example. And you can do a data analytics course. There's a very good data analytics course taught by an MIT trained professor. So you can mix and match. As I said, what better skill to have to mix data analytics with finance, right? Core finance knowledge. So that's the way I would structure it. There's no need to run out and do a master's in finance or do a master's in data analytics. You can do it all within an MBA program. And that's what I would say. But if you feel your calling is to do a pure master's in finance specialized class, then I would say go for it. But you're being very narrow. I think there are a lot of other skills, especially behavioral, organizational skills, that you learn in a generalized MBA program that you don't get in a finance program. I know it because I taught in a master's in finance program while at NUS in Singapore. It's very focused. You're only doing finance classes. But an MBA teaches you much broader skills, including how to interact with teams, how to behave in organizations. And I think those are very important. I ran one of the biggest quant groups in New York. I can tell you, I had 60 people in Zurich, London, New York, some in Asia, Australia. It's not easy to manage people around the world of different cultures and different stripes. But once you put a common goal, a common objective, a common mission, everyone lines up. It doesn't matter which country you're in, they line up to the mission. So that's what's important. How do you get group dynamics working towards a mission and objective? And you learn that in an MBA program and through our action learning, because you work in teams, and that is very important. The one about MBA with experience, I'll let Stephanie maybe answer that about how important experience is.
Yes, Stephanie, please do. And I also wanted to add on some more questions for you together. So if you can take all of these together.
Yeah.
One was, of course, around the fees for the program. So I've posted the link to the MBA program details in the chat window. But if you can also talk about the fees for the MBA program at the ASB, and also a little overview of the career opportunities. So I've posted the link. I did see a lot of students after graduating work in Asia, but also there were some finding opportunities in North America and rest of the world. So if there's any input that you can provide on the career development office at ASB.
Okay, so yeah, I do see that there are a couple of questions. Let me try to answer one by one. The most straightforward ones, that is the fees. So right now we are talking about the affordable tuitions at about 35,000 US dollars, 150,000 ringgit. So basically, it's a tuition fees that we include actually all the tuitions at ASB and also at MIT, and also including when we require you to actually travel to MIT and other locations for the action learning project and business practicum, we will include the accommodation as well. Now, there are fees that students will need to add on, will be the accommodations in Malaysia and air tickets. Now, all these details and breakdown will provide the slides to you after the session. I think the most important thing is also from the poll, we see that students also asking for the fellowship and also funding support. Our program does offer the fellowship for up to 50%. Depends on your qualifications and criteria and achievements. So, and also we have guidance for the students to actually apply for these as well. So we will share the information with you. Now, in terms of the experience, as we mentioned, now, although we have like the average 7 years of work experience in the program, but we do have students have like 2 to 3 years of work experience. This is the minimum, because it's very important when you have certain level experience before you join the MBA, because the learning that you will have, not only that you can contribute to the classroom learning, but at the same time, you can resonate and understand the theories and concepts better as well. Now, if you do not have any experience, maybe just 1 year or less than that, we do recommend students to wait for a while. But if you say that, hey, I just really have 2 years experience, but I am on fast career track and I'm super smart and strong, I really want to give it a try. Every year we have students to apply for that. And then we do have early admissions for the students as well. Means they are not yet qualified, but they are very strong. And then we are willing to wait for them. So we will give them the offer so then they can join us within 1 or 2 years time. All right. In terms of the career opportunities, yes, Sanjay, you're right. I mean, students graduate from our program, they do not just go back to their countries or stay in Malaysia only. They do find jobs on and explore different career opportunities in the Asia Pacific region, even back in Europe or also US, it depends. Now, our career development office, we do have connections to bridge the gaps and then try to help the students to look for different functions, industries in different countries. Now, not every single students will have the career switch or jump right away, but most of the students, that's why I say, if you look at the last year, 2022 figures, 90% of our students actually got their job offers within 3 months upon graduation, which is a very encouraging figures that we have. And again, all the statistics and then detailed information, we will share more through the slides that we send to you after the session. Okay.
Sure. Stephanie, I wanted to bring in one more question is around the support for entrepreneurs. So this was a question that has been asked as well. This is asked by Gauri. She possibly wants to start something of her own post her MBA. And what is the kind of support available to students at ASB if they want to pursue an entrepreneurial track?
Okay, so put it this way, in terms of the course components, we definitely have courses, actually several courses related to the entrepreneurship and innovation as well. That it's the academic wise is how we support it. And also we have student club, it's also entrepreneurial club. We always have like a group of students, not majority, a group of students who actually, they are already running entrepreneurship or their own business or startups or even family business in the program. So for those students who are in the program and they are wanting to, start something, we do have like, I would say the, after the program, so we have additional 4 months that students, if we really want to start up something and then try to, use the university resources as well, we do have that support for the students that they can extend their study and then to explore this area. Yeah.
Great. Thank you, Stephanie. So Gauri, I hope that answers your question. Shivangi, your question has been answered as well around the work experience. So the average may be around 7 years. Minimum requirement is around 2 years. In case of exceptional candidates, you can also possibly apply and get a deferred. Try for a deferred admission. So of course, you'll need to have merit for that. In case you want to get your profile evaluated by Stephanie for the same, I'm posting the link to the profile evaluations that she's doing on this coming Saturday in the chat window right now. So you can click on that link, block a 30-minute slot, and during that time, you can run your profile through Stephanie and get feedback on your fit and see if you stand a chance, even if you have lesser than average work ex, right? So minimum is 2 years, average is close to 7, but that doesn't mean that you need to have minimum 7. There are candidates with 2, 3, 4, 5 years of work ex also who make into such top ranked MBA programs. So do consider applying in case you're interested. I do want to bring in Joe. I'm sorry, we are running over time. We have already crossed the 60-minute mark, so my apologies for that. But I do want to bring in some more questions around careers and possibly Joe, bring you in as well. So if we look at from an Indian student's perspective, right, Singapore and Hong Kong are these two big regional financial markets for us. Of course, Mumbai is a hub, but Singapore and Hong Kong are the two aspirational markets. And Stephanie, you too, do you see any of the students from ASB making their pathways into such regional hubs? Or do you see a lot of your students working in Kuala Lumpur and the financial markets over there?
Stephanie, or you want me to go first?
Yes, please. Yeah.
Okay, so let me tell you something about internships are much easier. Many companies are willing to offer internships. Both Singapore, Malaysia, I found it because I have huge contacts in the financial industry, not just in Singapore and Malaysia, but also in New York. But when it comes to full-time jobs, everyone's a bit more reticent because visas are getting more difficult. Not just Singapore, not just Malaysia, even in Singapore. I'll be very honest with you. It takes a bit more work, but that's one thing about us. We work very hard on your behalf to make sure through our friends, our contacts, and so on. But that said, the two most surprising things I found out in the last few months working with my students, the graduate students, is that Hong Kong and Japan have been opening up more than Singapore and Malaysia. So you have to go where the opportunity is. And I can tell you something, many of my friends want to work in India. It's the fastest growing economy. It's the most robust. and it's really doing well. So the financial market has to follow where the economic growth is. So I think also don't rule out going back to your home country to contribute as well. So all I'm saying is the landscape is getting more difficult. But maybe Jay can talk a little bit about the MIT side. I don't know if you want to talk about the program that those who qualify can actually go and continue to do the 9-month program. Is that available to our students, incoming students, or is that not yet available, Jake? Where they can actually end up working in America as well.
Yeah, absolutely. So Joe, as Joe mentioned, students who go to ASB can apply to MIT's MSMS program. And after the MSMS, which is a 9-month program where you focus on the area that you're most interested in, like finance or other, you can look for jobs in the US. Given that it's a STEM designated program, you'll have an opportunity to work in the US for 3 years. And maybe that's a little easier. I would also maybe come back to one of the questions around entrepreneurship. In addition to everything Stephanie mentioned, ASB MBA students who just do the experience at ASB, forget about the MSMS that I just mentioned, they'll also have an opportunity to come to MIT in May. And one of the courses they will take is in entrepreneurship, learning from Bill Lett, who wrote the book about 24 Steps to Disciplined Entrepreneurship. So for people looking to start their own ventures after their ASB experience, having that opportunity to be in the US, to see the innovation entrepreneurship ecosystem here, to learn from Bill and others, will also be quite helpful to you.
Thank you, Jake. Thank you, Joe, for that. So I know a lot of questions are still pending, but we are significantly over time. But I believe Tejaswini, Aditya, I think some of your questions are answered about your finding opportunities outside of Malaysia as well, post the program. If you have more such questions, right, and you want to get more detailed feedback on your questions, get more insights, maybe sign up for the profile evaluation discussion with Stephanie on coming Saturday, and she'll be able to share more information as well. I've also posted the link to the ASB career site, the MBA program site, in the chat window, so you can also use those links to get more insights and information over there as well. With that, I would want to take all of your permission to wrap up this session. Unfortunately, we are out of time. We are 10 minutes over time already. So I want to thank all of you and take your permission to wrap up this session. Thank you, Jake. Thank you, Joe. Thank you, Stephanie. Thank you for taking out the time to interact with the audience. We still have 80 strong people in this room, around 75, 80 people in this room who are still sticking around. So I hope this session has been insightful for them. As I said, ASB can be a great pathway to a career, not just in South Asia, but also pathways like the MSMS program at MIT. So consider that. Of course, the pedagogy. In fact, I had some of my MBA faculty eventually go and teach at ASB as well. Professor Arun Pereira is one that comes to my mind. Professor Subramanian Sarma, I think he was part of the extracurriculars department at ASB, post a stint at my B school, where I studied. So, I've known about ASB since the past many years. It's a great program, brings in a lot of pedagogy, a lot of insights and faculty and curriculum from MIT to the Asian subcontinent. So a great opportunity for Indian students to leverage this. So if you are looking at a program in the Asia region, want to be close to family, want to be close to your home country, then ASB can be a great option for you. So do evaluate the program, the links to the MBA program, the career site, everything is in the chat window. Also the profile evaluation link with Stephanie is in the chat window. So make the most of this. And with that, thank you, Joe. Thank you, Jake. Thank you, Stephanie. Thank you for taking out the time to interact with the audience today. It's been a pleasure hosting you.
Thank you all.
Thank you very much. Look forward to seeing you on Saturday.
Thanks, everyone.
Thank you.
Thank you. Have a
Good
great
night.
day.
Good night.
Bye.